Walt here with the Schultz team at Canopy Mortgage. It is April 10th, and this is your weekly market update. Well, last week we had a bit of a ride on Friday when we had the unemployment report that came out right before, so was that Good Friday? So right before the Easter holiday weekend. And it was not the best report that we were looking for. BLS reported that there were 236,000 new jobs created. That's great. We did have a revision for January and February, which is 17,000 jobs. So they had subtracted 17,000 jobs from the numbers that came out in January and February. This caused the unemployment report to fall from 3.6 to 3.5%, even as the labor force increased. So remember that as we have a market or as unemployment starts to tick up like it did to 3.6 from 3.5, at that point, that's really showing signs of a recession. And a recession historically has shown signs of lower interest rates. That's one thing that we really want to pay particular attention to. When we really look at the jobless claims and the jobs report that came out, leisure and hospitality accounted for 72,000 new jobs in March. This sector has been hit huge, or it has been a huge driver of job gains after the massive losses during COVID. So, however, 98% of those jobs now have been regained. So we shouldn't see the huge numbers that we have been seeing as of late. Now, this week we've got the, let me share this with you here. We've got the CPI report that's coming out on Friday. I'm sorry, on Wednesday. Now, the CPI report is really showing really inflation, and it has the shelter component in the CPI report. Now, this Wednesday, it's going to be a pivotal day. We'll see where the report comes out as to whether it's going to show an increase of inflation or not. There's a chance that it could show an increase of inflation, which then could cause the Fed to continue hiking the Fed funds rate. We'll see where that is. And really the big number is going to be March 3rd is when the Fed comes out and they have their meeting again, is determining what they're going to do with the Fed funds rate. March 10th is when we get the next CPI report. And that CPI report should really be neutral between the sector of housing and between the main sector of the core CPI. Really, housing has been driving a lot of the CPI report, the core inflation report, up. If that continues here for this time, when it comes out on Wednesday, then it could cause our core inflation rates to tick up a tick. And again, if that happens, then the Fed could look at that and say, well, inflation really isn't as tame as they had hoped, and it could cause problems there. So last week we had CoreLogic that came out with their house prices nationwide, and they're looking at the fact that house prices rose nationwide 0.8% from January to February, and they're looking at price increases here in March of 0.2%. So again, still values are still rising. Just a family hack that I want to share with you guys. Of course, it's that time of the year where we're all filing taxes and frantically doing so. So with that in mind, I'm just going to read this to you here. With tax season in full swing, the IRS has released its Dirty Dozen list to warn consumers of the most common scams they have encountered this season. And here are just a few to note. The IRS will not initiate contact with taxpayers by email or text regarding a bill or a refund. If you receive a suspicious IRS, Treasury, or tax-related email or text, do not open any attachments, click on any links, or reply to the sender. It is fictitious. The IRS also warns about scammers offering people help setting up an IRS or an account at irs.gov which is easy to do and should not require any assistance. Scammers have been gaining access to people's accounts in this manner and filing fraudulent tax returns in the victim's name. The IRS also warns of fake charities stealing money for relief due to the emergency or disasters. The IRS notes that the pressure to donate immediately, especially by an unsolicited call or email, is a telltale sign of a scam and has led to the stealing of personal funds and financial data used in tax-related identity theft. So really watch that. The IRS also shared common warning signs of shady tax professionals, including charging a fee based on the size of the refund, refusing to sign a tax return, or asking consumers to sign a blank return. So really watch for those. Just, when you have those little pricklies on the back of your neck that stand up, then it typically is not a good thing. One thing I wanted to bring your attention to was we've been hearing a lot of talk about FHA potentially FHA starting to go from a 30-year amortization to a 40-year amortization, or bringing this up. Now, if we look at this, really this has so far been a rumor that was created. We have not seen really any substantial data from FHA. If they are going to bring this out, it supposedly is going to be in May. So really, I've not been talking about this, but I've been seeing a lot of this out on the internet. So one thing I just wanted to pull your attention to, the difference between a 30-year FHA loan and a 40-year FHA loan. Now, the reality is that if we drop the interest rate by 0.75% from 6.5 to 5.75, the payment becomes virtually the same between a 30-year mortgage and a 40-year mortgage. So in doing that, why don't we just offer a seller credit if that's something that really is going to be, of that big of a deal for the client. And the idea is that it can lengthen that note out, and it can really help individuals out. But again, we're really looking at a 0.75% decrease in interest rate, and we have the same payment. So I don't know that it's that big of a deal. We will find out from FHA here coming up, but is it a good thing? I don't know. So as we really look at this week ahead, we've got the CPI report, the core producer price index report comes out on Wednesday. We've got the producer price index on Thursday, which gives us news on wholesale inflation. We've got the small business optimism report will come out from the NFIB on Tuesday. Jobless claims will be released as usual on Thursday, while Friday brings news on March retail sales. We also have this week on Wednesday a 10-year note auction, and on Thursday a 30-year note auction as well. So that we have really a busy week this week ahead. So watch your calendar, watch the market. Rates are going to be extremely volatile this week. We are in a locking bias. All right, thanks. Have a great day. I hope that you're finding value in this.